Welcome to TheStreet.com TV. I'm Aaron Task, joined by Don Schreiber. He is CEO of WBI Investments, where he manages $250 million in dividend-paying stocks. He's also the author of All About Dividend Investing, and here's the book, which I won't throw at the camera. Don, thanks for being here.
Thank you. Thank you for having me.
So today's a day where you could say it's a sign of the benefits of dividend investing, because you have the Dow Utilities hitting an all-time high, intraday at least. Dow Industrial's hitting an all-time high. The Nasdaq's down as we're talking now. What are the benefits, in your mind, of dividend stocks?
Well, over the long term, dividend-paying stocks provide investors with a safe, reliable return from the dividend. You get that check in the mailbox that investors can either spend or reinvest in shares. If they reinvest it, they get the benefits of compounding, which is really important in building wealth. Over the last 100 years, if you take a look at dividend-paying stocks, about half the return from stocks has come from the dividend.
Right, so when people talk the historic 7% gains for the S&P 500,
right,
half of that comes from dividends.
About half comes from dividends. And so people have overlooked dividends for a long time until this most recent tax act that came out in 2003 and cut the tax rate on dividends to be equivalent to or on par with capital gains. Now dividend stocks are back in favor. And as the U.S. Population ages, people are looking for more income.
Right.
They're going to definitely turn to dividend-paying stocks, which should lift their values generally.
Okay, well, where do you look for dividend stocks? Because obviously sometimes a high dividend is a sign that the company's stock price has fallen dramatically, or
Yes.
high dividend yield. So how do you know what the difference is between a yield that looks good and a yield that could be a value trap?
Okay, well, what we look at, there's a couple of components that are real important, and one is cash flow per share. How much cash is the company generating from operations? And we take a look at that, and also their short-term debt position. If they have a lot of short-term liabilities coming due, they may not have enough cash to continue to pay the dividend. So by looking at those two things in combination, we can determine whether or not the company should be able to continue to pay this dividend that they have. And that keeps us usually out of danger of the company cutting the dividend. One of the other things that we look for is the dividend payout ratio, and that's the percentage of earnings that the company's paying out to fund its dividend. If it's more than 100%, we would stay away from the stock.
Because the dividend's at risk.
Yes.
Okay, and I just did a quick printout of the highest yielding stocks in the S&P 500, and more than half of them are either utilities, like Progress Energy and Southern Company, or banks and bank holding companies, like Fifth Third, Bank of America. I assume you have stocks of this nature in your fund. Are there other sectors that you look for yield?
Yeah, we look for yield all around the world, both domestic and internationally, and we typically are looking for yields of at least 1.5 times the S&P yield, which is about 1.7% today. So we start really looking for stocks that yield 2.5% or more, and we find stocks in all industries, pretty much in all cap sizes, that have yields in the 3, 4, 5, even 6% range. What you'll find is outside the U.S., that developed big companies typically will yield 1.5 to 2 times their U.S. counterparts. So if you're really looking for yield, we find a lot of opportunities outside the U.S.
Okay. Can you give me a couple of examples of names in that category?
Yeah, one that you wouldn't think of, but a biotechnology drug company called BioVal, the symbol's BVF, has a 6.1% dividend yield. It's a Canadian company, and we think that they've got strong upside. They've been moving good lately. They had great earnings reports. I think that they had a 60% improvement last quarter over the year before. So this is a stock that's really undervalued based on what's going on today. They have plenty of cash, good operating income, and we think their story is going to get better. But you can find stocks like this, and this is really a mid-cap stock. So there's a good example.
And the fund is long, but BVF right now?
Yeah, we own it as money managers for clients. I own it personally, so we believe in what we talk about.
Don, thanks very much.
Thank you.
My guest has been Don Schreiber. He is CEO of WBI Investments and author of All About Dividend Investing. I'm Aaron Task. Stay tuned for more of TheStreet.com TV.